Welcome back. We have an update from Citizens Inc. It trades on the New York Stock Exchange under the symbol CIA and is a diversified financial services company providing life, living benefits, and final expense insurance and other financial products to individuals and small businesses in the U.S., Latin America, and Asia. Please welcome President and CEO John Stenberg and CFO Jeff Conklin. Welcome back, gentlemen. What's your update today?
Well, hi, everybody, and thanks, Anna. Our update is kind of cool. So I just came back from a trip from Colombia and Ecuador, giving speeches and having meetings throughout those countries. They called it the Death March because for 4 days you don't have a chance to breathe. You are flying. I took 9 flights in this last business trip, firing up our salespeople, and let me tell you, the enthusiasm is really great. Only to come to California and for another meeting and to get sick there. So I'm a little under the weather, and that's why Jeff and I are not in the same location. I don't want to get my CFO sick. So I'm going to get a real quick update on, for those of you who are not familiar with Citizens, and what we do. So we sell low risk, not real sexy, not real exciting whole life, but it's where we sell it and how we sell it that I think is really cool. And so we sell those products in domestically and internationally. So let me talk a little bit about domestic. We have a business in Louisiana where we have a highly managed sales team in Louisiana, Mississippi, and Arkansas that sells a final expense product. And then we now also have a more broadly sold national product sold through independent agents. I know we're over 3,000 agents now selling that product, and that's where most of our current growth is happening right now, is among those independent agents. Our goal was 12 million, and we're closing on 30 in that channel this year. So we're way over sales expectations overall. And then internationally, we sell in Taiwan, throughout South America and throughout Central America, and we've got great partners in those areas, and they're independent, but they are pretty much dedicated to us, and they pretty much only sell our product. And so that's who I was having meetings with last week in South America. So it's interesting. We're going through such a growth spurt. Over 70% of our renewal premium, which is premiums that are coming in from past the first year, come from our international side, but almost 73% of our new sales are coming domestically. So that gives you an indication of how fast we're growing domestically. And a lot of that growth is being driven by, one, we think we have a much easier way to do business than some of the old stodgy companies that are out there that haven't really updated their technology and the way they do business. And two, we designed our product to be white labeled by our distributors from day one. So that gives them a unique product they can sell, and only a name they get to pick as they go and recruit their agents. And it makes that business very sticky. It makes those distributors very sticky and very loyal. And over 60% of our domestic business from this new channel now is coming from that white label product. So we're really, really excited about that. So super quick, 230 plus employees. We have clients in over 80 countries. We cover over 5 billion of life insurance face amount now, and we have about 1.7 billion in assets. So with that, I think I will open it up to Q&A.
Great. Well, congrats on all of that. So in the most recent quarter, Citizens increased the amount of insurance issued by 86% year over year. So, wow, what's driving such rapid increase?
What's driving, great question. What's driving that rapid increase is the demand for our white labeled and our final expense product among independent agents. We went from essentially 0 to over 3,000 agents, and adding all those new agents, and we've actually spurred demand by actually throttling how many agents we let in, because, as you know, scarcity breeds demand. So if agents hear they can't get an appointment with us, that makes them really want one. So kind of have this pent up demand for us out there. and that's what's driving it.
And so talk domestically, what really differentiates the life insurance and final expense products leading to new sales? Who exactly is the target market?
So domestically currently, because it's likely in the future we'll expand this, but currently in the United States, the target market is lower income folks that are underserved by traditional life insurance agents, and these are affordable, low-cost policies for a dignified burial, and that's the target market. So there are agents that generally specialize in that, and those are the agents that we've been adding over the last year.
And like you said, the number of producing agents is going up as well. So the amount of insurance issued is going up. Why wouldn't premium revenue also be going up as rapidly?
Great question. So I was thinking about this earlier this week when we were in some other discussions, and if you look at if you ever sat through a Netflix investor call, they're obsessed with subscribers. Did your subscribers go up? Did it go down? If it didn't go up by exactly the amount you expected, their stock takes a plummet. We're not quite that sensitive, I would say, to that. But when you make a life insurance sale, it is kind of like adding a subscriber in many ways. They're making a commitment for 10, 20, 30, 40, 50 years or even more of future premiums. So you report sales, and that's that first year, that's that first premium, and that can go way up, but you reap the benefits for decades to come. Next year, you want to grow more, and then it'll start to stack on each other, and that's where you really see that steam engine, building steam and going fast.
And I'm glad we have some time for our viewers' questions. Specifically, Cal wants to know how many clients on a percentage basis renew their policies, right? And the ones that do not, do you see those numbers declining?
That's another great question. So in the final expense, Cal's onto something there. We call it persistency, is a little bit lower than your traditional or affluent client, because often they run into liquidity issues and other issues that are challenges for them. And we build our product for that. We build some resilience into our ability to reinstate those products. And we expect in our pricing roughly 80% of those first-year clients to renew. And internationally, the number's higher, much higher, actually.
And so the stock has done very well. Do you still see a good amount of upside?
Well, I certainly do. I'm buying. So I think we have unbelievable growth potential internationally. And this management team is dedicated to not just growing the top line, but growing in areas of the market that are not commoditized, that have healthy returns. And that's been a problem with life insurance. Large life insurance companies, they tend to focus just on the areas of the market that have been commoditized and are producing low returns. And our intention is to avoid those areas and focus on areas of high returns. So the combination of profitability and growth, I think, makes this a great stock.
Well, Cal also asks, what percentage of year one premiums do independent agents keep?
They keep zero. 100% of the premium is given to the company. Yeah.
Okay. Okay.
Yeah, and we do pay commissions, but we generally don't discuss those publicly.
And why do so few customers renew their life insurance policies? Why do they even sign on if they cancel?
Well, like I said, oftentimes they run into liquidity issues, or they bought a little bit more than they realized they wanted. There's a number of reasons why people may not renew in that second year. But again, we get well over half renewing in the second year, and internationally, it's probably closer to 90%, so 9 out of 10. So it's a pretty healthy persistency rate.
And I guess last question, Chris wants to know, what have you been able to put into place this year to try and stem the rate, you kind of capped your revenue growth. So, sorry, that question just got. What have you been able to put into place this year to try and stem the rate of policy abandonments? What are you doing to avoid that?
Well, what we've done internationally is we're launching a product that is designed to capture our endowments. Now, we've sold a lot of endowments in the past, and so those are ones that are scheduled to endow or mature in 20 or 30 years. And so for a long time, that money would just leave. And so now what we've done just recently is launch a product to capture and offer a product to capture that money and keep it within the company, and allow the customer to continue to have some coverage going forward. So I think that's going to go a long ways to retaining those assets.
Wonderful. Well, thank you, gentlemen, for this update, and congratulations on everything. We look forward to seeing you again with another successful update in the future.
Thanks, Anna. Thanks, everybody.
Thank you.
All right. We'll be right back, everyone.